Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show, but I would like to give you some hints about the company. Let's guess the company, what it is. The company provides e-governance solutions. That's the first hint. Let's put the second hint. The company is involved with PAN, Aadhaar and ONDC. That's the new thing on the block. We'll discuss that with the management. The third thing is it's impacted by the non-empanelment for PAN 2.0 project, and that is where the overhang is there. Another hint I would like to give you is that they have roped in Pankaj Tripathi as a brand ambassador. That's pretty interesting. So that we'll be looking at for, and also the stock, how that has moved. That's down 52% in last 1 year. What happens now? And you must be guessing which company this is. I've given a lot of hints to you, but let's move on. There is a kind of a social media we had done in the morning that Protean was very much important in everyday's life, and Protean eGov is the company which I'd like to talk about. That's also very much important in our lives, especially with the digital public infra. This is the company which I'm talking about, and let's understand why we are getting this company. The company has also undertaken a very major kind of a blow in the stock price in the last 6 months to 8 months. There's a recent order wins have started coming in, and we want to know outlook ahead for this company. Of course, they are having a lot of legacy-based contracts. That's what we'll be asking. The margins have been under the pressure. What's the road to the recovery? Is there a change in the customer profile going ahead, or will they stick with the legacy business? Also, the new projects, what's the guidance looking like, especially in the international segment, the ONDC segment? That's what we'll be asking the management as well. Also, another question is, what's the plan for the capital deployment? The company is having sizable cash reserves. What do? Do they acquire the company or they keep it? What happens for the shareholders? Of course, the stock has taken a beating, so expectations are there from all the stakeholders. The competition and the risks for the legacy business, that's very much important. And if there is a higher concentration risk of the B2G orders, what happens for the company? And also, on the show, we'll have Suresh Sethi. He's the MD and CEO of the company, where we'll ask Suresh all the details and the concerns which have been coming in for the company as well, and the outlook ahead going ahead as well. Also, let's give you more details about the company, what's more important to actually talk about, and let's see what this company is all about. It gets a bit technical, so that's why we are at KYC to actually simplify it for you. It was incorporated in December 1995. And this is, of course, IT-enabled solutions. They create digital public infrastructure. It sounds a bit technical, but it's very simple. Previously, the company's name was NSDL e-Governance Infra, and now the name has been changed to Protean eGov. They're the largest issuer of India's digital tax identity. That's very much important. Whatever your identification is, there a lot of back-end work happens from the company. It's developed innovative citizen-centric eGov solutions. This includes Aadhaar, PAN, ONDC, and largely 21 nationally critical e-governance stacks. So the stacks which are there, the back end, what's called in the IT space, that's called a stack, and that's what they have been developing. They are having a leading cumulative market share of 64% when it comes to the PAN segment that you can look at the top. That's very much important. You must be wondering, Aadhaar, PAN linkages are happening, so a lot of backward integration they do in the systems, and look at the numbers. That is very much important. But future, what lies ahead, that's also we'll be asking the management. Mr. Suresh, almost 14.4 billion plus online verifications are there, and this is the business of the PAN which you can see. Also, moving ahead, apart from this, let's look at how the issuance have panned out, and that has done really well. If you could just show the PAN issuance also, we can show how important it is. It has become roughly 8.7, but then there has been, of course, a downtick coming in. Aadhaar is gaining popularity, but nevertheless, PAN is also very much important. Also, let's see the revenue contribution breakup as how many businesses Protean eGov is having. So there is tax services, that's roughly, you could say 50% coming in. But apart from that, there are other businesses also, and the company is going into new businesses. The identity service, that's around 12%, and new business, it's around 4%. They are expected to increase that going ahead so that the legacy businesses, they also come down. But let's look at the rating parameters of how we judge a company in the KYC segment. There are largely 8 parameters which I talk about, and nevertheless the financials are one of the most important things to actually judge a company. So income statement, balance sheet, cash flow and return ratio. But apart from that, we see how the institutional ownership is panning out, how the retail is coming in, how the stock has moved, and of course valuations compared with its history. Largely the company doesn't have a peer, so we'll be comparing the valuations of the company's history itself and the outlook. That's very much important, and it's very important for the company, especially on the digital public infra statement. So first of all, let's go to the income statement. That's the first criteria to look at, and these are the numbers which I have got. These are the financial year entire numbers. It has been a decent growth when it comes to the revenue part. It has kind of plateaued in FY25. Margins is where my concern is there. Apart from that, the numbers are decent, even if you look at EBIT and the net profit numbers, largely flattish. But the margins, once it was at 14%, now that has dipped to 7.4% and 6.4%. Of course, I'll be getting you the H1 numbers also to give a balanced perspective on my analysis. But net, the margin profile has been impacted, and these are the numbers also you can see. You can have a look. There are some variations here, so you should not judge the company always on a quarterly basis. There are a lot of adjustments happening, but the freshest numbers, that's what I'm looking at. And it is still 7.5%. Almost you can see the margin profile last 2 years, what was it in FY22, 23, that has, become half. But net, the numbers are still stable. So I'll give a neutral rating, and the margin, that's the story which I'm talking about. The story changes after these 2 years from these 3 years. So that is where the analysis works for us, and it's a largely neutral rating for the income statement. Now the balance sheet. That's also very much important, and looking at the balance sheet, largely we see how the changes have happened, and let's just pull out the numbers. And most important thing to look at in the balance sheet will be the cash reserve that I'm talking about. The question is, where does the company deploy this? That's an important question we'll be asking Mr. Suresh, but let's look at it. That's around 130 odd crore rupees for deployment. Net, it is strong. It has held its ground despite what has happened in the loss of a major order which was there last year. That's a very big overhang for the stock, but we know that. So it's a positive rating coming in for balance sheet. Also, apart from this, the third one is the cash flow. Cash flow has largely been decent, but there is some variability, and it's around 195 odd crores in FY25. Cash flow to conversion has been very good, and remember, it's an asset-light business model, so there wouldn't be much liquidity issues coming in. But yes, the net cash flows, that has been not very uniform, and because of that, I'll still give a neutral rating. This is a different business model. That's why for these conditions, it's a neutral rating coming in from my cash flow segment. But 3 ratings are done. Let's move on to the return ratios, and that's where my concern is also there. Because of course, we can see some impact happening in the businesses, and generally you should earn around 15 to 17, 18 odd % in this kind of business model. That makes sense for the stakeholders, but the concern is that the ROC has been dipping 20%, 13%, 11%, and now below 10%. That's where the key concern comes in. This is the ROC numbers I'm talking about, the return on capital employed. And the ROE numbers also, the story remains the same. Of course, some aberrations are there on the higher side, but the concern is that it's below that 10 mark. So net for the return ratios, I'll be giving a strong thumbs down when it comes to these ratings. But let's look at the shareholding, how things have panned out, and largely FIs, DIs, publics, that's what I've taken. In March 24, it was roughly 10%. Again, it went up to 11, but then the sell-off started, and that's the sell-off you're looking at. Almost 8% stake is there. That means for FIs, the stake has reduced. DIs, it had a huge DI, kind of an exposure. That was 41%. That has reduced by 54% in just 18 months to just 22%. So that becomes a big concern. FIs reducing stake, DIs reducing stake, and overall public has increased the stake. That's around 70%. So I would be giving this a thumbs down as well. So we spoke about the shareholding pattern. But how does the street cred work? Street cred is nothing but your share price movement, which is happening month basis, 1 year basis. Let's pull it out, and that's where the concern is. The last 1 month, nothing happened to the stock. Stock was down 9%. 11% in 6 months. And then, of course, a very big negative news flow had come. And then also we see the stock year-to-date basis is down 7%. And 1 year basis, it's down 54%. And that is where the concern comes. The people in the middle term and even the 1 year basis haven't made money. And of course, this is a listing price. So overall net, it has been a deal breaker for the investors. So I've given a strong thumbs down when it comes to the street cred. Also, apart from that, let's look at the valuations. Look at the peak P valuation. It was 92 times for Protean eGov. Now let's see the current P, what's there. It's almost 1/3, 30 times current P is coming. So that is where I think it's cheap compared to its history. And if you talk about history, the 3-year average, that is also above the 50 mark. That's around 54 times. That means overall the valuations are looking very attractive. And because of that, because so much sell-off has already happened, I'll give this a strong thumbs up. So we spoke about the valuations, but the most important thing and the future, of course, in India's digital public infra is very much important. We have seen so much successful models. It's the outlook, the revenue contribution from new business, because old legacy business, there might be some kind of, kind of a plateau at times, but of course the story is strong. International expansion, especially Middle East, Africa, these are the places where the entire DPI infra can be actually replicated. The 1370 crore order from Aadhaar, UIDAI, that's also very game-changing, and that's a positive news flow coming in after the company lost out the PAN 2.0 projects. Also, importantly, roughly 14,100 crore opportunities there for data stack in India across the parameters. That's what the company has stated in their investor presentation. So we'll be looking at it. How much of this opportunity will the company actually grab and how much will convert into the incremental benefits in the cash flows, balance sheet and the PL. Let's give in the entire ratings of our analysis and where does Protean eGov actually stand currently in our show. Let's just get in the ratings overall, and net we see the income statement was decent, balance sheet filled with cash, and we are waiting what's the deployment plans. Cash flow neutral, seeing the business, but the return ratio is a concern, but the concern keeps on increasing. Shareholding, the institutions, both FIs, DIs are selling, while the street cred, nothing much has happened in the stock. But that's what makes the valuations attractive. Outlook itself, the long story still remains very strong. So that'll be very interesting to catch. And now the management will be coming in some time. And overall, the KYC rating, I have given this 4 out of 8. Now, Suresh Sethi, the MD and CEO of Protean eGov Technologies, I'd like to give a street cred a little bit about him. And he has been wearing a lot of hats across industries. I'd like to point out he's the ex-founder and CEO and MD of India Post Payments Bank. That means he already has a history in the digital public infra space, and the founder of Vodafone M-Pesa as well. So very strong street cred coming in, and board member of ONDC. That's something which Suresh is, and he's an MBA from Faculty of Management Studies, which we call FMS in Delhi as well. So Suresh, Sharad here, a very, very warm good afternoon to you, and happy 2026 to the entire Protean eGov tech family. We know about some overhangs which were there in the future. We'll come to that later. But the order wins have started coming in, and recent order win was there, and a UIDA order was also there. I would just like to know the timelines, how it's actually working out for that, the bigger order which I'm talking about, the UIDA from Aadhaar.
Sharad, good morning, and wish you also a very happy new year, and to all your audiences. So coming to UIDAI, this was a very significant order because this was the initiative by UIDAI to create Aadhaar Seva Kendra across the country. We got a mandate to set up Aadhaar Seva Kendra in 188 districts at a national level. And these are centers of excellence where anything related with Aadhaar is supposed to be provided. And we believe that it is going to be very foundational in terms of issuance of the national identity, in terms of any changes, demographic or biometric related changes that are also mandated, which need to be done at various stages of a person's life. All that services are going to be provided over here. We are well on our way to implement this order. So happy to report that some revenue streams have already started on this. The execution is well on track. And this is, while it's a 1370 crore order, it is pretty much OPEX in nature. And once the full deployment of the Aadhaar Seva Kendra happen, we see around a 200 crore of annual revenue coming from this mandate.
It's a very major mandate coming in, and annual revenue would be 200 crores for this project as well. But speaking of the numbers, Suresh, the margins, what I saw in the company in FY21-22 was different. Last, 2 financial years, it's different. And of course, it's sub 8%, even in, Q2 numbers coming in. When does this margin pressure get over? And will it be a very, gradual up move, or there is still some pressure?
So, Sharad, clearly, as we mentioned earlier, also there have been investments in new businesses. So that is one part of the investment ahead of time which has happened over there, and we'll talk about the new businesses. Clearly, the other area is, as we've seen that over the period of last 3 or 4 quarters, we've got some very significant orders. All put together, we are currently running an RFP order book of around 1,600 crores, which is almost twice our annual revenue in a manner of speaking. And this includes both domestic and international orders, one which we just recently received. And so there is, again, investment which goes into servicing RFPs of this scale. We've also, over the course of last year, set up our corporate office at one international center, and we've also set up an office in Dubai to take care of international business. So some of these investments will naturally, have been ahead of time in a manner of speaking, and the outcomes and the revenue should flow through. We therefore see that, the overheads will get absorbed in the normal course of business, and the margins should therefore improve from there. The other clear area is that most of our businesses, some of them like the pension business we run for as a CRA to the industry, these are largely annuity businesses, and therefore we definitely see that these expenses will get absorbed over a period of time, and the margin profile should improve.
Suresh, if you could just give us a time frame, 12 months, 18 months, 24 months, where does the benefit start coming in?
We should start seeing it in the next coming quarters.
Next coming quarters, that means you mean to say from the fourth quarter onwards, the benefit starts coming in, the incremental benefits in the numbers. Okay. Suresh, the international projects, generally the entire DPI infra which you have already made, and it's a successful model in India, for countries in Middle East or even in Africa, it's easy to replicate them as well. Just like to know what will be the revenue profile, today and maybe 5 years down the line when it comes to the international projects, because that is something which the management has been focusing on.
So Sharad, clearly the focus has been to take India's DPI stack global. As you're aware that for Protean, we've always been at the forefront of developing e-governance infrastructure, as we used to call it earlier, and now clearly the parlance is digital public infrastructure. So the company has been pretty much a pillar in India, whether it was taxation or pension or other ID-related projects, which are more the foundational DPIs. And our intent, therefore, was that whatever we are building for India, can we take it global? And likewise, there has been clearly a focus by the government to take India DPI global, because it is a very balanced approach to solving at scale for inclusion and digital enablement. And we see that it resonates with a lot of countries which are at the same evolutionary stage as maybe India was 10, 15 years ago. And therefore, our thrust to take India's DPI global. And we believe that whatever we build over here, there is clear opportunity for us to take similar frameworks, similar models out. And we had earlier also mentioned that we are today looking at a modular playbook of digital public goods that we have created over here, whether it is on identity, on data sharing, on consent manager, or verifiable credentials. And we can use this playbook to create DPIs, like a DPI in a box model in multiple countries, where the timelines for executions can be similarly, brought compressed.
Suresh, that's a very interesting point you raised, and a lot of Gen Z folks are there who, when they're traveling abroad, they're putting in an UPI transaction, be it in Dubai or maybe in France, and that's where India is expanding. where the global DPI comes in. So in the next 5 to 7 years, apart from UPI, which product do you think, maybe an ONDC, which can be India's export to the world? What will be that?
So, Sharad, there are various countries at different stages. What we are currently seeing, even as we speak with them, there are a lot of countries which are at a very foundational stage. They are looking at ID as a DPI, right? Because they need to solve for identity and digital identity. And clearly, what they see, because one shoe doesn't fit all, different countries are at different stages. For us, as we work with countries, more important is to share the knowledge with them to say what a DPI can actually deliver to them in terms of social, in terms of economic, in terms of gradual use cases, whether it is in the financial sector or the non-financial sector, like agriculture, health, education. So therefore, I won't say that there is any one particular area which will become the single use case. Each country will have its own approach. And that is where we feel that India's approach of building the foundational DPIs and then expanding it across sectors is something which will become very relevant for the global South and for other countries as they develop their
Yeah,
own infrastructure.
interesting. Suresh, another query is, of course, there is largely you look at the capital deployment. There is a decent amount of cash on your books as well, and shareholders over the last 6 to 8 months, the stock has been under pressure as well. Are you deploying this cash in some acquisitions, or is there any kind of return expected on an announcement we can have for the shareholders? Because they have written to me, so I wanted to put that concern to you as well.
There are two parts to it. One is, as we are looking at, and we spoke about the large order book that we are playing with, part of the capital naturally goes towards executing these large scale projects, because as you know, there will always be a timing mismatch from the investment you do to the point that you start receiving the revenues on these projects, and therefore you need working capital over there. The second area, the company has been very selective in looking at inorganic opportunities. Recent, for example, strategic investment in NSDL Payment Bank is one I would like to call out, where we saw a great opportunity of working with a bank which is digital first in nature. Not just the bank itself, the entire payment bank ecosystem was built in a manner that these are institutions solving for large scale distribution, last mile inclusion, and therefore digital becomes a very much a DNA of these institutions. So it gave us a chance to stitch together a strategic partnership where we can now build and co-create banking technology and take it to the last mile. So we are being choosy in our investments, but clearly the cash is going to be deployed both in these areas, and that is where we see the money going.
All right. Suresh, AI, that's also very much important. I know you have been doing this since time immemorial, but that was not called AI. Now it's called AI, and a lot of buzzwords are there. So how are you using the AI, and is it actually benefiting the company?
So AI, I would say, is something now today you see it as being very ambient in the way it is getting used. Right from our coding and developing, when we are doing the foundational work of building on these large scale projects or our own product verticals. These are things we are looking at as being a pretty much an embedded part of it. Other than that, clearly it is towards productivity enhancement, which is again more internal to the company. So one side is internal, and the external areas where we see, and you've heard a lot of conversation around AI for DPI. So as you are building a digital public infrastructure, how can we embed AI for various
Right.
purposes? We work in the BFSI sector, fraud, risk control.
Sure.
That is one
So
area.
that's pretty
Behavioral
interesting.
patterns.
Yes, Suresh. Very interesting use cases you pointed out. But Suresh, just be with us. I'll just like to revise the KYC rating for our audience, and largely let's just pull out how the ratings have come in. Financials are looking good for the company. Street is of course looking at where the deployment comes in, but some concerns are there in the return ratios. Stock, even the stock price movement, and the institutions, they have been reducing their stake as well. But the outlook and the valuations, they look good, and overall we have given a KYC rating of 4 out of 8 for Protean eGov. But coming back to Mr. Suresh, budget 2026, what are your expectations from the industry, because the government has been very bullish on the DPI front? So any kind of expectations from the industry?
So I think clearly two, three things which we are hearing, both from a regulator perspective, and I'm assuming the government will follow through on some of that. One is clearly one of the businesses we run in the space of pension. So we are seeing a clear thrust by the regulator and therefore by the government in increasing pension penetration. There have been a flurry of activity over there, and initiatives have been taken. And that is one area clearly which would be very adjacent and something we look forward to. The other areas are clearly in the space of AI and DPI. The government has been at the forefront of it in making sure there are enablers for creating the digital public infrastructure. As we cut across sectors, we do expect across different sectors, across the MSME world, there will be opportunities to further enforce and reinforce the DPI equivalence. And last but not least is bringing AI as a very ambient and embedded feature into it. And how can we create that knowledge base, those databases? There are again a flurry of
Thank you.
activities and
Yes,
initiatives
yes,
which we believe will come forth in this.
Suresh, that's a full 360-degree view you have given for the industry and for your company as well. And just to put in perspective, a lot of new things are there. And best of luck for the future, Suresh, for you and your company, and seasons wishing as well. So that's all, folks. Thanks for tuning in into KYC only on NDTV Profit. We'll be getting you more and more new companies, the untalked companies, the companies which have lost the significant stock prices. But is there any sunrise, or you could say an up move from these segments? So stay tuned to NDTV Profit.